Are you looking for a really strong, steady, high income and strong dividend growth rate portfolio for the core for your investments? Stick with me till the end of the video. We are going to cover 4 of my favorite ETFs that can give you both growth and income today while giving you stability and diversification. Stick with me to the end though, because there are a few things that you need to be careful about. Let's get into it. Fantastic, easy to maintain 4 ETF portfolio for the core of your dividend investing portfolio. This is a very nice, very easy way of getting started with dividend investing. Now, for this portfolio, I've selected 4 of what I think are the finest, best dividend ETFs, but not only that, I wanted to get a selection that would work well together. So we've got some that focus on strong dividend growth, we've got some that focus just on general higher dividend income, less dividend growth for the US, one that focuses here on international stocks with dividend the really high, as well as slightly lower growth rates, and energy and infrastructure as well, where there's much higher levels of dividend income, but also in this particular ETF a little bit of additional growth thrown in there as well. I don't see ETFs here as an either or with individual stock picking, but I do believe that they can make an absolutely fantastic core for the portfolio. So if you take the core satellite approach, 4 ETFs like this can provide you with a very solid, stable core, providing a lot of income and some growth and some stability. And around that, you can then go and pick complementary individual stocks to add to your portfolio. Now, how much would you put into these ETFs? Well, that's a question perhaps for another day, and it also depends on the individual's risk tolerances and preferences. Okay, so the first is the Schwab US Dividend Equity ETF. So this is much loved by many dividend investors. Now, I love it. It's got a strong yield here of 3.7%, and as we click over to the dividend tab here on Seeking Alpha as well, we can see in the dividend history over time it's got this beautiful increasing level of dividends here as well, and we can see as well that they pay quarterly and they just keep on going up. So the dividend yield itself then is coming in nearly 4% now. If you're looking at the dividend scorecard itself, so we can see the dividend yield here at 3.7%, and the 5 or 10-year dividend growth rates here, ranging from the 10-year dividend growth rate, CAGR, from about 11% through to 13% in the 3 years. So we can see some really nice, strong dividend growth rate here for SCHD. Now the main holdings, we can see here industrial 17%, healthcare 15%, financials 14%, consumer defensive 14%, technology 14%, cyclical 9%, energy 9%, communication about 5%. So we can see a really, I think, nice general diversification here over different industries: Broadcom, PepsiCo, Merck, Cisco, Coca-Cola, Texas Instruments, Home Depot, Verizon, Pfizer, Chevron in the top 10. So these are all definitely stocks that I think we'd be holding and we'd be interested in holding as dividend-focused investors. Now, the next up we have the HDV, the iShares Core High Dividend ETF. Now here we can see a slightly higher dividend yield, and I'm going to switch over to the dividend tab. We can see the dividend yield is indeed higher than SCHD, and we can see there is some growth here, but it's looking at about half of what we saw in SCHD, so higher starting dividend yield with muted or slightly lower growth. Now when we look at the actual holdings as well, we can see less diversification, higher weighting in healthcare, higher weighting in energy and technology as well. We can see here in the top 10 holdings, Johnson & Johnson, another one of my beloved companies, Xenomobile and Chevron here, so some very big energy holdings here in the top 10, Verizon again, AbbVie, Broadcom, Pfizer, Coca-Cola, Cisco. So you can see as well that there's some overlap in the top 10 holdings, which is a little bit concerning, and there's only 81 holdings here, and the top 10 holdings actually represent quite a large proportion of the overall fund as well. So that's something, there's a little bit of concentration here, but I think warranted in this particular case. Now moving to the next option, we have the Vanguard International High Dividend Yield Index, the VYMI, and as promised, it's high dividend. It's 4.47, and as we flick over to the dividends tab as well and look through here, we can see 4.47 with some dividend growth rate here as well of about 5.3 and 3.6. So as I put these together, I do like the dividend yield. I do like to see dividend growth as well, and I also just like to flick look through the holdings as well, and here we can see financials is quite high, so we've got some really nice exposure to the financials on this portfolio, putting these together, a little bit of whole energy, industrials, and then quite a bit of diversification over the rest. Now there's 1,400 holdings here, and the top 10 holdings are only 15%. Shell, so international energy, and as we go through, again, many names that dividend investors will know and will probably love. So it's a nice easy way for us to get exposure to a lot of these international stocks. Now the final choice here is the MLPX, the Global X MLP and Energy Infrastructure ETF. Now this has a higher expense ratio than the others, which are almost zero. Again, dividend frequency quarterly. Now as we flick over, it's not as old as some of the others, but we've got a dividend yield here of 5.5%. and a 4.3% compound annual growth rate over 5 years and a 1% over 3 years. So we've got some exposure here to growing dividends and a slightly higher bump here as well in terms of the overall dividend yield. Now the holdings, it has a relatively small number of holdings as well, only 28, so very low I think for a dividend stock here. And Williams Companies, TC Energy, Corp, Enbridge. So these are all again names that many dividend investors will know and love as well. I've turned to the backtest portfolio here in Portfolio Visualizer. Now I've put it on rebalancing, and even though I've selected 20 years, we don't have 20 years over all of these assets. What I've done is I've taken the 4 ETFs and the SPY and I've put them in two separate portfolios. The first portfolio I've weighted 40, 30, 20, 10. So the highest income earning asset here is the lowest proportion, and I think SCHD is, as I said, the strongest of the four, and therefore I've given it the lion's share of the portfolio. So represented visually, it looks a bit like this. So 40%, 30, 20, and 10. And the SPY. So 40% for SCHD, 30% here for the HDV, the iShares Core High Dividend ETF. The exposure to the international stocks here with high dividend yields at 20% with VYMI, and 10% here for the Global X MLP Energy Infrastructure Fund. Now, over the period here, which is only since January 2017, the ETFs have a compounded annual growth rate of only 8% compared to the SPY's 12%. They also have a higher max drawdown, which is interesting to see, and roughly the same standard deviation. So on the basis of these numbers, it doesn't look as good as a pure investment in the S&P 500. And as we can see here, even though they relatively track, and we can see the correlation's very high, also here the market correlation of 90% or 0.9. We can see here since about 2022, it's sort of gone sideways for the ETFs, while the S&P 500 sort of gone down and now jumped up a fair bit in the recent months. Annual returns, not too worried about that. That's sort of what we expected to see. Annual returns for the ETFs in blue is always lagging, except here in 2022 where it outperformed, but otherwise tends to lag quite a bit for the S&P 500. But what I want you to look at here is the portfolio income. Now here as well, the dividends are being reinvested. And we can see the SPY here in orange has a slowly increasing dividend yield, but here in blue from the dividend ETF portfolio basket, we can see the strong increases here in dividend income as well. So look, I personally believe that this combination of these 4 dividend ETFs that I've discussed, SCHD, HDV, VYMI and MLPX, I believe they're going to work really well for most dividend investors. They don't have the strongest total returns. You can have better total returns investing in the S&P 500. However, what they do provide is a really nice combination of both reasonable yield now as well as dividend growth, and that's what many dividend-focused investors are looking for. I believe it has a very, very strong, solid foundation, the core of a dividend-focused portfolio. I like it. It's got good diversification across sectors, across the different geographic regions of the world. It's got both yield, it has some good growth rates. It's going to be, because of the composition of these ETFs, it's going to be mostly avoiding yield traps and avoiding high-risk companies, really focusing on those solid, strong blue chips. Now, I think the diversification is also really important. If international stocks or the different international currencies are going to start to outperform the US companies and the US currency, then of course our international exposure is going to give exposure to that outperformance, and that's really, really important. But for most investors as well, these US-based companies are going to keep us stable and steady, and they're really going to provide that core foundation here within our foundation. Yes, total returns are lower than the SPY. Who cares? If our goal is really just income and growth of the dividends and some really strong solid total returns taken together, in my mind this is a really nice option and better than the S&P 500. What do you think? I want you to hit me up in the comments down below. Is this going to provide a really solid foundation, or is there something that you think that this portfolio is missing? Let me know. I'm really looking forward to hearing your thoughts on this, and I'll catch up with you soon in the next video.